Hi everyone, good afternoon. And on behalf of Freedom Property Management, I'd like to welcome you to, our June landlord meeting. And thank you all for taking time to join us today. We truly appreciate your continued trust in allowing us to manage your properties. And today we have a great session lined up for you with special guest speaker. And after the presentation, we will also have share company updates on leasing, maintenance, as well as the current real estate market before opening the floor for any remaining questions. And before that, of course, I'd like to introduce Freedom Property Management team. Let me start with yours truly. Hello, everyone. I'd like to say happy Friday. I hope everyone is enjoying their day. My name is Roel, your assistant property manager here at Freedom Property Management. And also, I'd like to introduce to you the owner of the company, Tiffany. Hi, Tiffany.
Good afternoon, everyone. Are you having fun yet?
Thanks, Tiffany. And also, I'd like to call in Tracy, our property manager. Hi, Tracy.
Hey everybody, it's Friday.
Thank you, Tracy. And also, of course, our director of operations, Ella. Hi, Ella.
Hi everyone. Good afternoon. Happy Friday.
Thank you, Ella. And also our leasing assistant, Pat.
Hi everyone, good afternoon. Thank you for joining today's meeting. It's nice to meet you all.
Thank you, Pat. And also Rance, our system and manager. Hi, Rance.
Hi guys, good afternoon.
Thank you, Rance. Thank you, everyone. So that's our, people and faces behind Freedom Property Management. And at this time, I'd like to, invite Tiffany, giving the floor to provide us an overview of today's topic, the investor's guide to real estate financing, and also to officially welcome our guest speaker today. So, Tiffany, the floor is yours.
Thank you so much. Happy last Friday of June, everyone. We're very excited to have you here. We're excited to have our guest, who I will introduce here momentarily. But we wanted to focus today on sort of alternative ways to grow your portfolio, to grow your investments, and different strategies that real estate investors use to do that. And leveraging your money through different financing options is one very common and popular way to do that. And the goal at the end of the day with real estate investing is it's usually one or more of these three. It's to create cash flow on a monthly basis, to build equity within that asset, which happens over time with your tenant paying down the mortgage and natural appreciation. And then we also have just the general scaling and multiplying that some of our investors do by scaling and adding to their portfolio, going from 1 to 5 to 10 to multiple. And so there's different ways to accommodate all of those through different financing options. We'll go to the next one, Roel. Kind of duplicating a bit on what we talked about, financing and leveraging those investments can give you money to do a variety of things. It can give you money to improve that property. It can give you money to go on vacation. Hopefully you're not refinancing and cashing out your properties to go on vacation, but hey, I'm not going to tell you what to do. You do you. A lot of people will do that to add and to buy new rental properties. They'll leverage one or multiple in order to have cash ready to really be able to jump on a good deal that they find. Or they might need to do big repairs on that rental property. It could be time to replace a roof and replace an HVAC and replace a water heater. And in today's day and age, if you've got a standard size townhome, all of those three together is going to easily be $15,000 to $20,000. And so some people need to do that to fund renovations and some capital improvements. So we'll go to the next one, Roel. So different types of financing. Most of us are familiar with standard mortgages. to buy a primary, to buy an investment property, to buy a second home, maybe a home equity line of credit, things that are very personal. And that's where most of us start. But there's additional types of loans that can be used and specific additional types of loans that have to be used for certain types of property. And so if you're looking to purchase a commercial property, well, you can't get a standard mortgage. You can't get a VA loan to buy a commercial building. You have to work with commercial business lenders. You can also do bridge loans is something that people do to leverage kind of one property to the other, pull equity and value out of one without selling it yet to buy the next one with the intention of selling that one that you took the equity out of, and then you get a permanent loan on this other one. Bridge loans tend to be a lot faster than selling a property. So we have investors and buyers that may use a bridge loan if they have to move quickly and they don't have time to sell the property that they need to get the money out of. And so we'll bridge that equity over. There's multifamily loans that kind of goes into the commercial side as well. And then it also lumps in with some portfolio loans where you can secure a larger loan with multiple properties. And sometimes you can exchange those out, and those aren't with your traditional mortgage banks. These are with your other financial institutions that have commercial and portfolio lending divisions. And it's a much different, a much bigger process there. And then there's other asset-based loans where they're underwritten, and the terms of that loan or the qualifying of that loan isn't necessarily based off of your income as the borrower. It's more so based off of what that property is going to bring. So, for example, all of you have performing rental properties. And so if someone wanted to come in and buy that from you, then they may be able to get a loan based off of that rental income and not off of their individual income. So a variety of different ways to go about this. We are not the experts and the professionals, which is why we like to partner with those that are. So we can go to the next slide. So today we have a longtime property management friend of mine joining us. Tim Wehner is well known in property management and real estate here in Virginia. He's been in the property management, the multifamily area for a long time. Has been involved with NARPM, which is our National Association of Residential Property Managers, provides us with a code of ethics to run our businesses by, and also education, networking, and fellowship. So Tim agreed to join us today. He and his team at LendingOne are our most recent partners here at Freedom. We're brought LendingOne in as a strategic partner to then open up opportunities for our landlords to be able to have access to different financing options to grow their portfolios if they need that. And so we're happy that Tim agreed to join us today to talk about what they do differently at LendingOne, how that benefits Freedom and our landlords, and kind of where he also kind of sees the overall real estate buy and hold business in our area. So appreciate you being on, Tim. I'm going to hand the floor over to you, sir.
Thank you very much. Appreciate it, Tiffany. I did not love when you just said that we were longtime friends. That made me feel a little old, but I did like I'm gonna send a request to share my screen here. I just refinanced a couple of properties myself, and you've given me permission to use that money to go on vacation. So very excited about that.
Hey, I didn't give any permission.
You did. I didn't even think about that, honestly.
I mean,
So what a great idea.
you do you.
Also, yeah, no, really appreciate you guys having me. And excited to talk to you a little bit about LendingOne, and obviously very excited about our partnership with Freedom. You know, as Tiffany said, I've been in the investment game and the residential property management game for close to 20 years at this point. So I've seen it all. I ran a company called Dodson Property Management in Central and Northern Virginia, and we had an office in Sarasota, Florida as well. I did that for about 17 years. And so I'm excited today to talk about LendingOne's products, because it was something that after 14, 15 years of being a real estate investor, I didn't even know about. And so we're really excited to bring this to our property manager partners and their clients because my thought is that a lot of you all don't know about this as well. And so I'm going to jump right into it. Got a brief agenda, just talk about the different types of lenders. I know Tiffany touched on it a little bit. I'm going to talk about our products specifically, our DSCR loan and the differences between that and a DTI loan. I'm going to talk about some different investor profiles. You may fit one of these profiles, you may not, but hopefully we'll go through profiles that at least mirror something close to what you are, and then how our products might help benefit it. Go through all of those, and then we'll open it up to some Q&A. I'm also going to talk about just how the partnership with Freedom will work, at least how it will hopefully work well for everybody. But first about LendingOne. So LendingOne is a national private lender. So basically, we have a big bag of money and we'd like to give it out to folks. It's kind of a fancy way of saying we're a more organized hard money lender. If you know what a hard money lender is, it's usually somebody in your local market with a book bag of money, and you call them on Friday and say, "Hey, I got a property I want to flip," and they'll show up on Monday with that bag and drop it in the front yard for you. So we do it a little bit differently, hopefully a little bit more professionally, but yeah, it's a private lender is kind of mirrors what a hard money lender is. But we have a bunch of different products. We offer rental products, fix and flip products, portfolio products, fix to rent products. We've been around for a while, 11 plus years in business now. We do business in 46 of the 50 states. We don't do anything in Nevada, Alaska, or the Dakotas. Alaska and the Dakotas are a little bit too rural for us, and then Nevada, you have to have a branch in Nevada, so we don't do that. My graphic here says 15,000 loans to date. I think we're up around the 17,000 loans at this point. So obviously we are established. We've been in the business for a while. We are really, really focused on investors. That is all we do. We do not do a mortgage where you're going to your bank and you're buying your personal residence. All we do is focus in on investors. And so we really think that that's really, in addition to our product, that's the thing that sets us apart, is that we are strictly about understanding what investors need. I just got off a call with some folks that are some short-term rental folks, and they were talking about their investors, and we have some short-term rental products as well. I won't get into those today, but just talking to some of our loan guys, they're so well versed in what investors need to know and what they want to talk about. So really excited to be here. I've only been at LendingOne for a short period of time. I actually started using LendingOne, and that's how I kind of came over into LendingOne. So, but very excited to be here and share our products with you. Get right into it. So you guys know this, you're investors. Who funds residential loans, right? It's either your personal savings, you got some friends and family. That's how I bought my first one. I was fortunate enough, my dad loaned me $13,000, and I bought a $33,000 rental property and renovated it with the other. I can't remember what my down payment was or whatever, but I was fortunate enough to get into it that way. Not everyone is that fortunate. But there's local banks. Tiffany hit that earlier. You got credit unions, you got all those folks. And then there's specialized lenders like LendingOne. Like I said, hard money lenders, people who do things that are kind of outside the norm of what you would traditionally think would lending would look like. But kind of those are the four different buckets that you look at, right? So your personal savings, I don't need to tell you about that. You got your own money. Take it on vacation or buy a rental property with it, right? You got your friends and family, you got your local banks, then you got your specialized lenders. So just really quickly to talk about the benefits of each. And just to be clear, this slide is going to skew a little bit towards private lending, but I think that it's extremely important for all investors to have folks in their Rolodex in each of these categories, right? There's benefits to all of these. And so while I think going with LendingOne is a really great option, there are obviously spaces where you want to go with a bank. There are obviously spaces where you want to go with hard money when it makes sense. So I'm going to present everything that we have, but make sure that you know people in your market that also do these things, and you have great relationships with your bankers as well. So some of the benefits here, like obviously your local bank, right? It's not fast. I was just doing a refinance and it took 90 days. This is people that I've done business with both on a business level and on a real estate level for 12, 13 years. And it took almost 90 days to do a refinance on a rental property. It's just not fast. They're trying to underwrite me as a human being, despite the fact that I paid all my bills there on time for that many years. They still want to make sure that my debt to income ratio matches their requirements, right? The great thing about it is they typically have favorable interest rates. They're going to be the best of the bunch, right? So if you have a deal that's really right on the margin and you really have to try to make it work, it could be a great option for you, especially if you don't need to close quickly or you don't mind providing a lot of paperwork. Because that's the other thing. It's gonna create a lot of paperwork for you. They're not going to be typically investor focused, as Tiffany was saying earlier, right? Commercial lenders are a little bit differently, but your local bank isn't going to be investor focused, right? They're making the majority of the loans they're making are personal loans, and they're underwriting human beings. I talked about the hard money guy, typically a guy with a truck and a Bluetooth in his ear, and uh, they're really quick, right? Like I said, it's you call them on Friday, they're there on Monday with something, right? It's going to cost you a little bit more. Their rates are typically 4, 5, 6 points higher, and can be more than banks or private lending in some ways. Again, they're going to know your market really well, though, right? There's advantages to having hard money people. If it's a very specific deal and you need some specific help on something, they may be able to provide it. But it's going to cost you a little bit more. They will be limited on paperwork. They do understand the investment game. Honestly, the majority of hard money lenders I know are investors in real estate themselves, and they've just figured out how to provide some money to some other folks, but they want to loan it to you in person as well, right? And whereas a bank may come take your asset, a hard money person may come take your kneecap. Um, the last one is, thanks, Tiffany, for the laugh there. It took you a second, didn't it? The last one is private lending, right? So, for me, this one checks all the boxes. It's quick. We can close in 7 to 14 days. Our interest rates are fairly close to what your local bank is going to be. In fact, they're really almost negligible right now with some of the shifts in the markets. And we have been right there, kind of within a quarter of a point all year of the local bank. It's really limited on paperwork. As I said, we're extremely investor focused, and we actually will not lend to an individual. It has to be to a business. So it has to be to an LLC or an irrevocable trust. And so there are benefits to that. Obviously, sometimes you want to lend it in your name, and sometimes you want to lend it in a entity. So just wanted to go through all the benefits of each one of those really quickly. I know, like I said, this is not saying do not use a bank or do not use a hard money lender. There's a time and a place, and I will use all three. So just wanted to point out the benefits of each and let you all know why we're excited to be in this partnership with Freedom. So I want to talk a little bit about our product right now. So what we do is called a DSCR loan. I'm going to start by giving you context on what you're probably familiar with, which is a DTI loan, debt to income ratio, which is basically just somebody who's underwriting a human being and they're looking at an individual's monthly debt payments compared to their monthly gross income. A debt service coverage ratio loan is a ratio that compares an entity's income to its debt obligation. All right. So basically, can a business pay this back? In this case, we're talking about the business being a real estate asset. So again, here your formulas are pretty easy. So it's total monthly debt payments to gross income on the DTI side. On the DSCR side, it is, in this case, the rent divided by your principal, interest, taxes, and income. Notice I didn't say property management fees. We do not underwrite based on any additional fees or debts other than the principal, interest, taxes, and income, right? So if your property is going to rent for $2,000 and your PD is $1,900, we will absolutely lend to you. So it's a big difference, right? So like I said, on the debt to income side, right, you've got a personal income requirement. You have to make money every month. You have tax returns, right? You have to have years of tax returns in order for somebody to underwrite you. They'll want to put the loan in your name and report it to your credit bureau, right? On the DSCR side, we're loaning to a business, so we are allowed to kind of circumvent some of those rules. You can make $0 this year and we'll loan you money, right? If the business asset makes money, you can get a loan on it, right? No tax returns needed. We do not put it in your name, so it's not reported on your credit. And again, I used the 2000 and 1900 example. If it's 2000 and 1999, we'll still loan you money. So a really big difference there and a really big advantage. And at the same time, the terms are relatively close, right? We charge a little bit more on the interest side, but these are 30-year amortized loans, and they're really, really great products. Um, so here's kind of the four investor profiles that we really think that we service pretty well, right? You may fall into one of these buckets. You got your rehab specialist. That's your fix and flip person, right? You're looking for rapid return. You want to get a big chunks of cash. You've got your long holder, right? That's the buy and hold person. You've got your BRRRR person. Well, it's missing an R there. Sorry. It's supposed to be buy, rehab, or buy, renovate, rent, refinance, repeat. So there's supposed to be four R's there, right? But another great investment strategy, a little bit harder these days, right? Everybody kind of read Bigger Pockets and got on that train, and they're harder to find, right? Value add properties are a little bit harder to find, especially in my market in Virginia. And then you got the asset collector, right? Person who wants to scale and diversify. They may be in real estate, they may be in commercial, they may be in the other markets as well. Fortunately, if you fall into any of these categories, we've got something for you at LendingOne. The advantages of your fix and flips, you use somebody else's money to create cash, quick closings, right? You can spread your money over all your projects. And then the really great piece is on our bridge loans, which is we call bridge loans anything where you're fixing and flipping something, or we are giving you money on the renovation costs. That's a bridge loan for us. We'll cover 100% of the cost, right? So if you are renovating a property, we're actually going to give you 100% renovation costs. Not a lot of lenders out there are going to do that for you. So how do your PM partners help, like Freedom in this point, right? We know you never quit. You might change strategies. So, Freedom wants to be your strategic partner, not a cost center, right? So how do they do that? They may hold inventory for you. Never forget that the MLS is a great spot. Your local realtor is a great spot, but Freedom may have internal within their system. They may have something for you. So make sure you're calling them and saying, "Hey, I'm looking to do a fix and flip. Do you have anybody who might be looking to sell a distressed asset?" Make sure you're in their Rolodex so you might be able to grab some inventory from them. Our standard product is our 30-year DSCR rental loan, right? So this is kind of just what I went over, right? This is just your standard loan. If you want to buy and hold a property, right? If that's your strategy, you're a buy and holder. This is for you. We also have a 30-year, it's a 10-year interest only DSCR loan that is really popular amongst folks. It's still a 30-year loan, but it's 10 years of no interest. If you have a property that might not quite meet your cash flow requirements on your standard 30-year, you might try to squeeze a little bit more out of it with the interest only. The cool thing about this is there's no limit on properties, right? You go to your local bank, they may only give you 5 properties. If you're looking to buy 25 properties in the next few years, this is the product for you. Again, we're very flexible on our loan term and options compared to a traditional bank. Keep in mind again how Freedom helps you, right? They've got all this information. We're underwriting things around rent. If you're looking at a property, Freedom's going to have that information for you, right? They're going to be your experts that you want to lean on. Call them and say, "Hey, what do you think this property is going to rent for? I'm maybe thinking about buying it." That's a great phone call for the folks over at Freedom. They've got that information dialed in. They do it for you every day. They know your market really well. Make sure you leverage them for that. Your fixed to rent loan, this is very similar. It's a bridge loan, just like your fixed to flip, right? You can use us to buy, renovate, refinance. Again, we hope that you'll flip that into a 30-year DSCR, and if you do, you get reduced origination fees, you get reduced rates on your purchase, and you get reduced bips off your total rate when it comes back to you. Again, this is kind of your BRRRR folks for the most part, right? These are going to be your folks who are finding a distressed asset. They're going to try to fix it up, refinance it, pull it out. Again, back to the inventory piece for Freedom. That may be a really great spot for you if you can't find something out on the open market. They may have something. They may have an investor that has something that's distressed that was getting behind on maintenance and wants to exit, right? So keep Freedom in mind there as well. Here's a unique product that I see happening a lot as well, and I think Tiffany mentioned it earlier, but it's our portfolio DSCR loan. So here's a 30-year loan. If you own multiple properties or you want to own multiple properties, we'll do a minimum of 3 and roll them into 1. The only thing that has to happen is that the entirety of them need to cash flow. So if you have a great performing property and you have a dog of a property that's just kicking your tail, right? We've all had that happen, right? And you've got another one in the middle. We can roll all those into one, and as long as they cash flow together under one note, we'll loan it to you, right? So you get discounted fees on this. You can close multiple properties. You can save yourself some operating time. So yeah, so it's a great way to roll in a bunch of properties into one. And then I don't know if anybody on the call might do this, but new construction loans, something we do all the time. It's obviously really big right now. I just did a new build myself. Did it through LendingOne, super duper easy. I actually had some issues with it. LendingOne even extended the loan for me. So you can have a bunch of builds going on at the same time, flexible loan lengths. Again, we really understand the investor. So if you do new construction loans, we look at it as a bridge loan as well here. So we'll finance 100% of the or of the build for your new construction loan. So really great a product there for you. And again, Freedom may know some lots that you may not otherwise know about. I'm pushing time here, I think. Tiffany, tell me if I'm not, but just really quickly how this program works. Tiffany is gonna we provide a newsletter for Tiffany that's gonna give some updated marketing information. She may push it out to you. She may just keep it internal, but we're trying to keep them updated on what's going on in the market as well. Here's the really great stuff for you. Freedom will have an affiliate link. If you're ever thinking about buying a rental property, they'll have an affiliate link they can shoot out to you. If they may choose to put it on their website. I'm not sure if we're there yet or not, but all you do is put your name and info in, and we'll have a loan officer call you. The great part about my team is it's not just our regular population of loan folks at LendingOne. It's actually people on my team. So it's my team of partnerships that know property managers, that know property managers' relationships with their investors, right? We work with a ton of investors, but we know it's a little bit different when you're working with a property manager. And so all you have to do is fill out this affiliate link. Somebody will call you within an hour, right? If you're looking at a deal, just fill this out and we'll get to you. That's not to say don't email somebody on the Freedom team and they can't email me directly and get to me, but just a super easy way. You'll have a link and we'll be able to walk through a deal for you. We're also going to provide Freedom with a loan calculator. So the image you see on the right there with all this information here on 30-year DSCR interest rates and all that stuff, they will have this. So if you're looking at a deal, they may choose to walk you right through on this loan calculator. It'll give you the exact amount that you'll even need to bring to the closing table. It'll give you your interest rate. It'll give you your origination fees. They can help you get to whether a deal is going to work or not really, really quickly here. So beyond that, our relationship with Freedom is give us a shout, right? If you need anything as their investors, right, we can walk you through deals. If they don't want to do it, we can do it, right? So if you have something that you want to look at, if you have questions about loans, just reach out to me. I'll get you to one of our loan officers and we'll get with you as soon as we can and hopefully give you the information you need. Our goal is just to be a great partner for Freedom and a great resource for you as an investors. And yeah, we're happy to tell you if the deal is going to work or if it's not, or point you in the right direction to try to make it work. So yeah. Just wanted to let you all know a little bit about the partnership and what we do at LendingOne. And if there's time for any questions, happy to field any. If not, happy to yield the floor.
Thank you, Tim. That's awesome. While Tim is still on, we can definitely open up any of our landlord clients that are on the call live. If you have any questions, please feel free to unmute yourself and Tim can answer live. If you prefer to keep it off record, then you can email me or email Tim directly or any of our team here at Freedom, and then we can get those answers back for you. But this is great. I first met LendingOne and their team, last year, maybe year before Tim joined their team. And having his expertise and his property management knowledge, I really feel has just amplified their understanding for what our landlord clients need, and especially Tim's hyper local knowledge of Virginia and what Virginia regulations are, what types of properties we have here, and the very high turnover that we have, being a very transient area with military, government, state departments. So
Okay.
those are challenges and opportunities that we have throughout the Commonwealth. So I'm excited to have LendingOne on board. And landlords, you'll start to see that newsletter come out from Freedom. You will see it on like your owner statements. You'll see it on your owner portal. You'll see it show up on our website. So you can reach out to them directly or come through us. So thank you again, Tim, for coming on.
No, thank you. I really appreciate you having me on, and you guys have a great rest of your session. Thanks for all the time, and looking forward to everything.
Tim. You're welcome to hang if you want. We're going to keep on rolling.
All right, you guys rock. Thanks.
Thanks, Tim. All right, Roel, we're good to roll. Next slide, sir.
Thank you, Tim, and thank you, Tiffany, for sharing your expertise as well as the insights on the real estate financing. And for now, we can jump to leasing performance overview for the month of May. I'd like to call Tracy to walk us through for leasing performance data. Hi, Tracy.
Hello. So it's that time of year when things are getting busy. So our leasing performance, we had 8 properties that we leased during this time period. And we are thankful that we have a majority of our tenants that like to stay with us and continue renting the properties. So we negotiated 15 lease renewals and only had 4 tenants move out. So again, our goal is to continue to provide value properties and good services so that we can keep our properties rented long term. We do also have quite a high volume of properties, as most renters do have pets. So we do have a lot of pet-friendly properties. We do have strong retention, and which presents for a limited turnover, which is why we only had 4 turnovers. We do have, out of those 4, one owner chose to reoccupy their property. 2 owners decided they were ready to sell their homes, and 1 tenant moved out for their own reasons, and we re-rented that property. So a lot of activity, and this is just the beginning. It's going to continue, and again, our goal here at Freedom is to provide good services, value, and maintain vacancies to a bare minimum at all times. Back to you, Roel.
Thank you so much, Tracy, for that information. And also thank you, team, in helping our owners to minimize the vacancy and also place qualified tenants to our properties. And now we can move on to maintenance performance overview for the month of May. So during this period of time, our team successfully managed 68 total work orders with average completion time of 5.4 days. And we're also proud to report to you the rating or resident satisfaction rating that we received, which is total of 5. And these numbers definitely reflects the commitments that we are providing in a timely communications, quality repairs, as well as excellent experience to both residents as well as to property owners. And looking at the most common maintenance requests for the month of May, here are the top 3 issues that we received. Number 1 is air conditioner, about ceiling leak, as well as the garbage disposal. And by monitoring these trends, we can definitely proactively work with our owners to recommend preventive maintenance, helping reduce unexpected repairs and also protect the long-term value of your property and also the investments. And one of the metrics that we're so proud is our residents' feedback that we receive. So these are some of the feedbacks that we receive from our residents. Mike is easy to work with and always confirms what is needed, professional, courteous, and timely throughout the process, and overall experience was excellent. And with this, comments are direct reflection of the dedication of the team, maintenance team, Freedom Property team, trusted vendors, partners who work, hard every day to deliver exceptional service. So as always, our goal is not only respond quickly when issues arise, but also to identify maintenance trends early so we can help prevent larger, most costly repairs in the future. And that concludes our maintenance performance for the month of May. Yep. And with that, I'd like to hand over the floor to Tracy to provide us final, update for the real estate market. Go
That
ahead,
is
Tiffany.
Tiffany. Tiffany.
Hey, that's okay. We have a lot of
Sorry.
teams in our company.
Yeah.
All right. Usually we have Stacy provide our real estate market update, as she is the team lead for our real estate team with LPT, but she's on a very well-deserved vacation in Jamaica. So I'm going to fill in a little bit for her. We have seen both within our portfolio as well as market overall significant consistency on the real estate sales side. Given that, it's also very hyper-local. We have neighborhoods throughout the area that are moving like it was 2021, 2022, that are multiple offers and over list price. And we have other neighborhoods that are sitting 30, 60, 90 days on the market for sale. Very similar property styles and ages and quality, and but just 10 miles to a different direction is really impacting certain communities. So these statistics are overall for the entire Northern Virginia region. And this is year over year, so May 2025 to May 2026. Increase in the number of homes sold, so more inventory out on the market, a slight increase in the median price point, and a slight, however, decrease in the months of inventory. So the months of inventory on the sales market, that's a direct reflection of whether we're in a quote unquote buyer's market or a quote unquote sales market. And we're still very much in a seller's market. It's a little more balanced, especially in some of those hyperlocal communities that we're talking about. But we still have a very, very strong real estate market for sellers. Average days on market was holding steady on the sales side of about 15 days overall in Northern Virginia. Pending sales are about the same. The housing inventory did increase. So that's where where we're going more towards this balanced market where there's more options. And we're seeing that on the rental side too. So on the sales side, that was up almost 4% in terms of inventory and a significant volume increase as well. So what this is telling us is that buyers are active. Buyers are buying houses, and the new listings coming on the market just in May was pretty steady. So overall, and we're seeing it in the properties that we are selling as well. The hot neighborhoods are moving quickly. Condos are taking a lot longer to sell than townhomes, and townhomes are taking longer to sell than single families. We have a lot of pent up inventory that is not coming onto the market for sale because a lot of our homeowners don't have to sell their house in order to move into their next situation. And so we have a lot of reluctant landlords or accidental landlords that are coming to Freedom as new landlord clients for us to turn their home into a rental instead of putting it on the market for sale. So we've got a lack of inventory on the sales side that would usually be hitting this like mid-range price point, but it's not hitting the sales market, it's now hitting the rental market. And so that is affecting us on the rental side. I didn't pull stats on the rental side, but it's negatively affecting us on the rental side in a couple of ways. Similar to the sales side, we have more inventory for rent. More inventory means more competition. Your tenants that are on the hunt have more to choose from. And so it's softening prices. It's longer days on market. Last month when we looked, we were twice the number of days on market than last year. So last year was like 23. This year, average days on market was like 40 something as of last month. We are seeing very similar trends when it comes to the type of home. Condos are sitting on the market longer. Townhomes are moving pretty decently, and single families are the most in demand. Those also are the least number of properties on the market for rent is single families. So as your property comes up for renewal, don't be surprised if our team is recommending very low rent increases. In some situations, we may be recommending no rent increase if we are already over the market price for that area. Like Tracy said, our goal is to, at the end of the day, maintain your rental property and maintain your income. And we can't do that if we have tenants moving out because they can move down the street for $400 less. And so trying to stay on top of that and ahead of that for you. But that may also mean that if we do have tenants that move out, we're not able to rent it for as much as you may think that we can rent it for. We need to be very strategic. We need to understand the competition, and we have to focus on the quality of your property. It is more important now than it has been in many years for us to be presenting a clean, quality, well-maintained, well-put-together property. Because if we don't, then that prospective tenant now has 5 other options to choose from. And what's going to make ours stand out to them if ours is not the best looking, the most well-maintained? And so don't be surprised if we come to you with a recommendation for turnover repairs that seem a little extra. We're going to make recommendations to position your property as well as possible while being as reasonable with the budget as we can. So at the end of the day, looking out for you. If you do decide that it's time for you to look at selling your rental property that's here with Freedom, let us know ahead of time. Let us know well in advance of when that lease comes up, because we do have landlords that are in our portfolio. We have realtors within our community that are looking to pick up investment properties, especially really good quality investment properties that have tenants in place. And so we may be able to accommodate your needs of selling that property. You're not going to get full market price because that's just not the name of the game if you have a tenant occupied property and we're selling to an investor, but it still may be worth it for you. So make sure that you're reaching out to our team so that we can have those conversations with you ahead of time and have you positioned really well. So with that said, that is the end of my real estate market and kind of rental market update for today. And that wraps us up, I think, right, Roel?
Yep. Well, before we wrap up, we'd like to open the floor for, questions.
We have a few owners on. If you have any questions, feel free to unmute yourself and speak up. Right.
Tiffany.
Hey, Joe.
Hi. I just, with Tim and LendingOne, is that just for the Virginia area?
No, sir. They are nationwide, I think in 46 states is where
Is
they
Texas
can
one of those
secure.
states? Do you know?
They don't operate in Nevada or in the Dakotas.
Right. Okay. Great. Thank you.
You're welcome. Great question. Thank you.
I think I'm not on mute anymore.
There you are. Hey, Karen.
Hello. My question is, if you go with a private lender right now, I'm with a bank, and I don't have any prepayment or early payment penalty, is that the same for a private lender, that if you go ahead and pay off, there is no penalty?
That's a great question. And the answer to that is it depends. So it depends on the type of loan and it depends on that lender's terms. They may have a prepayment penalty, like if you pay it off within the first, 6 months to 2 years. Especially if on the front end, if they're giving you discounts on fees and rates and things like that, they've got to at least hold the loan long enough to make that up, plus,
Sure.
their operating costs. So I would say your standard mortgages, your FHAs, your VAs, your conventionals, those typically don't have prepayment penalties. But if you get into some investment secured loans and more non-traditional loans, they may have some prepayments in there.
Thanks.
They got to make sure and make their money.
Right.
Very good. Well, thank you guys for being on. We really appreciate the trust that you have in Freedom. It does not, it's not wasted on us, the amount of trust and importance that you place in your team, in my team here. We have about 180 properties throughout Northern Virginia that we manage. And most of those properties are owned by individual owners. We have a handful of clients that have multiple properties. And so that means that instead of, everyone comes to me and is like, Tiffany, it must be great having your own business. You don't have a boss. I'm like, I have about 150 bosses. Every single one of our landlord clients, is who we are responsible to. And so, we really, we take that seriously. We want to make sure that we're taking care of you, that we're taking care of your tenant, that we're taking care of your property. And sometimes that means that we have to tell you no. Sometimes that means that we can't do what you're saying because we are the ones that are the professionals understanding the laws, understanding what can happen. And so we appreciate the trust you have in us. We appreciate that you trusting our knowledge and having relationships with lenders like LendingOne and Tim gives us those resources so that we can make sure that what we're providing for you and the recommendations that we're giving are, the latest and the best in the industry. So just wanted to end it with that. We hope everyone is having a wonderful summer, and we will see you next time. Thank you so much. Enjoy the rest of your day, everyone.
Have a great weekend.